Private equity firms, the good ones, definitely beat the public markets. We are in the business of turning great innovators into great businesses. There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills.
Orlando Bravo's early ambitions were far from the boardroom.
I wanted to be a tennis player really, really badly. I got introduced to the sport really early on, and it wasn't just the sport, it was the opportunity that it presented.
At 15, Orlando left his hometown in Puerto Rico to attend Nick Bollettieri's legendary tennis camp, training with many future stars, including Andre Agassi.
Luckily, I never played him in a tournament, because in the juniors, there was a tournament that he played wearing jeans and a Walkman. And that would have been so embarrassing to just lose to him when he's wearing that outfit.
After playing tennis at Brown, Orlando traded in his sneakers for wingtip shoes. He spent 2 years at Morgan Stanley before getting his MBA and law degree from Stanford.
I went to Stanford after 4 years there. I decided I wanted to be a tech investor.
Now, some 25 years later, Orlando is one of the most successful deal makers in the buyout world.
I love having those meetings where people kind of bet on you, and you come back 3 years later or 4 years later, and they're happy, and they fulfilled their goals.
With one of the best track records in private equity, Orlando's firm, Thoma Bravo, has made investors very happy. Last year, the firm returned over $13 billion to investors, but it wasn't always that way.
I asked Carl the other day, were you really thinking about firing me? And he said, you cost me so much money that I wanted to get my return back. So I stayed with you.
What turned things around for Orlando was focusing on software buyouts. Since 2008, Orlando has overseen over 465 software transactions, representing about $260 billion of value.
We're able to operate these companies at 40% margin, best-in-class buyouts, while fulfilling their innovation goals and their growth goals. How we do that is our secret sauce.
You've become the leader in the world in doing buyouts in enterprise software. But what is enterprise software?
It's actually really easy to understand. Enterprise software is all the software that is sold to a business. It can be a large corporation or it can be a small business. And it really has three components to it. One is applications. Think of everything that runs your business or a process that automates a human process. Like mortgage processing, for example. How does that work? Well, software makes that happen. Infrastructure software is a big second component. Think about all the software that runs your IT department, that makes all these machines work, that makes the cloud environment be up and running. And third, and a really popular area now that we're really big in, is cybersecurity. All the systems that protect your infrastructure and all the systems that protect your applications.
Now, the theory 25 years ago or so is that you cannot do buyouts of technology companies because the technology changes so rapidly that the buyout would be dated by the time you actually exited. So that proved to be wrong because a number of firms did technology buyouts generically, but you specialized pretty much in enterprise software. Is that right?
That's correct, and I'm really glad you brought that up about 25 years ago. And that's applicable to today. 25 years ago, investing in software was only really a venture capital business. Private equity in software did not exist. Now, on the one hand, venture capitalists thought that these software buyouts were of old companies that would be put out of business by upstarts and startups. And the private equity community thought, in general, a blanket statement that this is too risky. When you really looked at the franchise of each of these companies and how important they are to their customers, the opposite is true. They're some of the most stable and best long-term investments that you can make.
What do you actually do? What is your secret sauce? When you buy a company, do you go in and lay people off, or do you say we're going to hire more people? What do you actually do that makes these companies so valuable?
I can tell you in one sentence how we pursue our mission. That is, we are in the business of turning great innovators into great businesses. And that means the following. We get to buy companies that have revenues, say between 500 million and $1 billion, that are market leaders in these three segments of enterprise software that I described, that are growing at 10 to 20%, where most of their revenues are recurring, that are deeply embedded in their customer bases, that have proven ability to innovate and do something really, really important for these enterprises. Now, at the same time, these companies are not making much profits. We come in with our model, which includes not only metrics and processes that can be copied, with our culture, our philosophy, everything we've learned over 25 years and even longer through our predecessor firm. And we're able to operate these companies at 40% margin, best-in-class buyouts, while fulfilling their innovation goals and their growth goals. How we do that is our secret sauce.
Now, in the traditional private equity world, the CEOs who run the companies that are bought by private equity firms, they're often not the CEOs at the end of the transaction. In 5 or 6 years or so, they've moved on or they've been replaced. In your business, because you have a special model, do you keep the CEOs and train them how to do what you want, or do you get somebody else to be the CEO of the company?
The former. And that's part of our secret sauce, is we really, really work hard in trying to marry existing managements and existing CEOs' knowledge of their business, following from their employees, and they have been, as I mentioned, they have delivered great innovation and growth. We try to marry that with a private equity and fundamental approach to operating. When we do that, and when we do that well, that's when you get the absolutely best outcomes, because you're backing people that know their space so well and that live and breathe it every day. Now, it's not always possible. There are many deals that we come into the equation and there's not a match between the CEO and us. They want to do something different. We're speaking a different language. And in those cases, if we like the business enough, we will openly proceed with it with a different plan.
Traditionally, in the buyout world, when people do buyouts, they invest in buyouts, you do buyouts, people are trying to achieve a better rate of return than you can get in the public markets. Is that too difficult to do these days because the public markets have been very ebullient? Can private equity firms still beat the public markets?
Oh, private equity firms, the good ones, definitely beat the public markets. Think about software. The value advantage, the value creation advantage of the ownership model of private equity, where you have one owner with one management team, with one agenda, with very clear goals, and that owner is deeply involved in the success of that business. That creates the profitable growth that investors are actually looking for in the public markets. That value and the way companies are run in private equity, in our industry, in software, is so superior to the way they're run in the public markets. And that delta is what creates a much higher rate of return.
So when you call your investors and say, we made 17 times our money, I assume they say, bravo, right?
I don't know, they may.
Now, you're an expert in enterprise software and technology, I presume you know pretty well. So do you ever have the problem that I have when I'm using my computer, it doesn't work the way I want it to work, and I think I'm doing something wrong, but they just say it's something that I should have known how to do better? Do you ever have problems with your computer working at? No.
They call it a user error. I do user errors all the time. Actually, as an individual consumer of technology, I'm actually not that good. And you know, in the business, I've never written code. You know, I went to Stanford Business School and law school, and there I wasn't a technology person. I was interested in the business of it.
Well, let's talk about your background. Where did you grow up?
I grew up in a small town, relatively small town in Puerto Rico on the West Coast, Mayagüez, Puerto Rico.
So when you were growing up, did you say to your parents, I want to be a software buyout person, or what did you want to be?
No idea. I wanted to be a tennis player really, really badly. I got introduced to the sport really early on, and it wasn't just the sport, it was the opportunity that it presented. I got to travel to San Juan, and then I got to travel to Caracas, Venezuela, and slowly I started seeing different opportunities.
So you later went to Nick Bollettieri's famous tennis training camp, and I guess your roommate was Andre Agassi?
My roommate, actually, Andre Agassi lived, I think, in the 2 dorms away from us. It was Jim Courier that was one of my roommates. We lived with 8 kids. It was so fun, 8 kids in this little place, and seeing all these great players and living with them was.
And did you say Agassi's not that good, or Courier's not that good, or you said they're better than I am?
No, they were better than I am, even at 10, 11, 12. See, what happened is when we all turned 16 or 17, then you would see an even bigger difference. The speed, the explosiveness, the sport, the way they played it was just totally different than the rest of us who were like 20 to 100 in the U.S.
So then you decided to go to college, and where did you go?
Well, my mom told me, look, if you're not going to make it in this pro career, which is brutal, it's even harder now, why don't you use the sport to really get a good education? And I ended up going to Brown.
And were you a star at Brown?
I was okay. At Brown, it was really interesting. I was a bit burned out from tennis. I was in the middle of the lineup of the singles team. I was hiring the lineup in doubles. We had great camaraderie with our team, but once I went to Brown, I said, I now have an opportunity to really immerse myself in an education that I never thought was possible. So I played tennis kind of almost to support the team and for fun, but it was academic for me.
So you went to Morgan Stanley for 2 years?
Yes.
And then you went to Stanford Law School?
Stanford Law School and Stanford Business School.
All right, so after you graduated from Stanford Law School and Stanford Business School, you said, I want to be in enterprise software.
Very interesting. At Morgan Stanley, one of the first deals that they staffed me in as an analyst was the purchase of the supermarket chain for about $1 billion, where we were representing a family trying to buy it, a Latin American family. But the other bidders for the company were private equity firms. And that was my first introduction to private equity. I remember asking the associate in the firm, who are these groups that don't even have a company? And he described what it was. And I'm like, are you serious that somebody can raise all this money and just with no company can buy a multinational corporation? They said, yep, that's how private equity works. So I really was interested in the industry. But I went to Stanford after 4 years there. I decided I wanted to be a tech investor.
So what did you do?
So at the time, there were not, and you remember these times, there were not that many private equity jobs. It's not like these firms hired like you do now, 100 people a year. They were very, very small. And I got some opportunities in the Latin American group of private equity funds. And I was very grateful for that. But I said, the money's in the north. I want to go up and I want to go work in Latin America. And I had an affinity towards technology. Carl Thoma hired me. He was opening a small office in San Francisco and said, if you want to do technology, let's talk about it and let's work together.
So Carl Thoma was a person who had started a firm called what? What was it then called?
1980 Golder Thoma.
Okay.
Then it became GTCR. And then our predecessor firm in 1997, when I joined it, was Thoma Cressy.
Right. So you joined the firm and you did deals, and from the beginning, your deals were great, right?
From the beginning, my deals were terrible because it was pre-dot-com bubble burst. And instead of diving into software technology, we were doing, or I was doing, IT services, project-based businesses, really risky, trying to chase a return. And those deals really were very poor, bad deals. I was on the cusp of not being able to be on the firm anymore in 1999 or so.
So Carl Thoma said, you're a nice young man, you've got some great education pedigree, probably a good tennis player, but maybe software buyouts are not for you?
Said maybe the whole industry is not for you. You know, I asked him the other day, because I really thought that I was going to get fired. I was having my first kid then, Charlotte, and actually the pressure of business went way down with having a kid. You kind of focus on what really matters. So I thought there's a chance that, you know, they tell me that I shouldn't be here anymore. I asked Carl the other day, were you really thinking about firing me? And he said, you cost me so much money that I wanted to get my return back. So I stayed with you.
So you stayed, and then what did you do to turn things around? What changed? In the early part of this century, the deals turned around in the software area?
What happened is I really listened well. I've never invented anything. Certainly not the industry, certainly not software private equity, because I just borrowed components from other people. Two things happened. One is I was failing at this IT services, project-based business, kind of quasi-venture investment that was not for me in the first place anyway. So one of the things I looked at is I'm going to do a 180 degrees on it. That's something I talk to young people about now, is don't try to do the same thing just a little better if it hasn't worked. So we went for recurring revenue instead of project revenue, IP in software instead of services, existing management of existing companies instead of getting new people in to turn around or chase a business or start a business. That was one component. Now there was the luck component as well. As I was thinking through this and learning, the dot-com bubble burst, And now you could buy software assets, that recurring revenue stream for nothing. 0.9 times recurring revenue, 1 times recurring revenue. It was the opportunity of a lifetime.
So at what point did people say, well, you're not only pretty good at this, you're so good we should put your name in the firm?
We had one fund that started in 2000. And that fund, in that fund, which was a generalist buy and build private equity fund, we were becoming a software-focused firm. We did our first deal that was one of the first take privates of a software company called Profit 21. Took it from no margin with this great operating partner that's one of the most important people that has been at our company, Marcel Bernard. He's taught us everything we know about operations. We took it from no margin with existing management to 40%. We made 5x. We did another deal, we made 3x. We did another deal, we made 17x. So very quickly, we were becoming a software-focused firm. When we raised the subsequent fund to that, then the firm had my name on it. And in that fund, we did about 2/3 of our investments in software. We put a line in the sand in 2008, right in the middle of the financial crisis, and that's when we said we're going to do software only.
And do you have any 17 times your money deals I could invest in now?
That would be great. It's such a good question. I was on a meeting in '98 with a former partnership that I was lucky to be part of. And the conversation in that investment committee was, there is no longer 5x plus deals in private equity. Prices are too high. It doesn't exist anymore. That was in the 80s and maybe early 90s. And look at the last 20 odd years. You can still do this.
So when you call your investors and say we made 17 times our money, I assume they say bravo, right?
I don't know, they may. but you know, it's, and this is something personal for me. I love to serve. I love to serve our investors. I love having those meetings where people kind of bet on you and you come back 3 years later or 4 years later and they're happy and they fulfilled their goals. Why not come to Miami, a newer city, open-minded, has been extremely welcoming, and basically grow and continue to grow our culture and our differences here. And it's turned out unbelievably well. Why not come to Miami, a newer city, open-minded, has been extremely welcoming, and basically grow and continue to grow our culture and our differences here.
Thoma Bravo is part of a growing list of financial firms opening offices in the Sunshine State. From the start of 2020 through the end of March 2023, more than 104 investment firms moved their headquarters to Florida. But while many firms were lured by the state's business-friendly climate and lower taxes, it was different for Thoma Bravo.
We were growing so much in the same exact location, where the kids go to the same exact school, where they all live in Silicon Valley. You start basically talking the same way, thinking the same way, using the same terms, using the same phrases. And I'm very, very protective of our culture, our next generation, and the way to think differently.
To maintain its edge, Thoma Bravo moved half of its investment team from the Bay Area to Miami.
They're really coming here not for the city, they're coming for the company and for their job.
Later this year, Thoma Bravo plans to move into 830 Brickell, a brand new 55-story office building in Miami's financial district. Tech giant Microsoft and finance behemoth Citadel will be in the same tower. But for Orlando, that doesn't make Miami the new Silicon Valley or Wall Street.
Instead of having Miami say, I want to be like this or I want to be like that, Miami has an amazing opportunity to become a really, really important center of commerce and industry.
So during COVID, you could raise money pretty much sitting in front of a TV screen because you weren't expected to travel. Now, people expect you to travel again. So how much of your time are you spending on the road, either looking for deals or raising money? And how much of your time are you spending sitting in investment committees saying, do this deal or don't do this deal?
I spend about 70% of my time on what matters to the performance of our investors. And those are two things: helping our team buy more great software companies and helping our team operate those companies to success. Those are the two things. Young people in our firm especially are very interested in what our mission is. we sit them down, especially those that have just come in, and we say the following is our mission. People give us money in order for us to produce relatively high and consistent returns. And that's our mission. That's what we spend our time doing.
So to be somebody who's successful like you in the buyout world, what would you recommend that somebody do? They learn how to play tennis first, they grow up in Puerto Rico, they go to Brown, Stanford. What would you say somebody young who's watching this should do if he or she aspires to be like you?
You can follow any career path. And that traditional career path, because I do have the traditional elements, right? Brown, Morgan Stanley, Stanford, and then you go from there. There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
What would you say has been the best investment advice you've ever received?
I was in a meeting a long time ago when I was getting started. And there was a young partner that was advocating for a deal where the economics of the business were not that proven. Call it venture-y that way. And Carl Thoma did not like the deal. And he said, I really don't like this. And the partner said, well, Carl, if you want to make money, you have to take risk. And he said, not that kind. Not that kind. Is the best investment advice, therefore, and what that meant to me is, think about how you just minimize risk as much as possible from what you know and from what you can tell in that business instead of levitating too much and focusing on other things.
So as you look at investors over the course of your career, what would you say is the biggest mistake that investors make? Either average investors or people in your business. What's the biggest mistake that people make? Not
focusing on the actual business. Just like software was back then, people had general comments about it. Oh, this space can go out of business because of that. Focus on the business. Get to know it and figure it out. Young people in private equity, there's a thing about the diligence process. You have all these kind of consultants and quality of earnings and all these processes going on at the same time. And that's not investing. You may be checking things. Focus on the top 2 or 3 things that you need to figure out so that you can make money on this.
So today you're well known in the private equity world, but you're also probably pretty well known in Miami. If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
Okay. So today you're at the peak of your career. Perhaps your firm is doing spectacularly well. You a lot of money under management. You ever thought, life can't get better than this. I'll try something else because I can't keep replicating this. I'll go and run for the Senate. I'll run as a governor. I'll try to run for president. You ever want to go into government or be appointed to a cabinet office?
My answer is absolutely not. You said it. I love our industry and what I do just so much in many different ways that this is what I'm going to do for the rest of my life.